Hello, and welcome to Cleverchesstrading. In today's episode, you're going to find a way to always know when the market is going to move next. We will be using two ways to enter the market, using the ICT dealing ranges or the Rook Algo for intraday trading. As you know from previous episode, the Rook works in any time frame, but in this video, I will give the best time frames to know where price is going in the intraday morning session, and finally, I will showing you the real statistics with an automated algo as always. So let's start. A quick refresher: dealing ranges are created when price takes liquidity in both sides of the market, meaning buy stops higher and sell stops lower or vice versa. Once this happens, the market defines premium and discount. Whatever move does the market after defining a real dealing range is a very high probable direction. The market has to confirm the created dealing range is going to be respected. It does this by respecting the upper or lower portion and the dealing range and expanding to a specific draw on liquidity outside the range, usually creating fair value gaps, confirming expansions. If price came back into the established dealing range, is very likely to consolidate or reverse to the other side once it reaches equilibrium. So we basically are going to have two types or entries in the Rook Algo: the premium or discount entry that is a retracement followed by an expansion. And the breakout entry is the one that happens when price leaves or breaks the established range entering in the expansion phase. I am going to show some quick examples using the Rook Algo. Here we takes both side, creating a dealing range. If price takes first sell side and then buy side is a bullish dealing range. Notice that the algo knows it reaches discount, but the entry waits for a close above previous candle high to get in is a confirmation that it uses to avoid unnecessary stop losses. If price takes first buy side and then sell side is a bearish dealing range. If you're liking this video, don't forget to subscribe and hit the like button. Pretty an easy take profit here. So now what you're looking for, how to always know where the market is going. First, when I mean always is like 80 or 90% of the time. Of course, you know that the market can be manually intervened, so when this happens, it doesn't matter which ultra-high probability method you use to try to predict the market, it just won't work. So it's important to be aware of the high-impact news and be aware of the risks involved using proper risk management. Okay, now, the secret tips to predict the market, the most important concept to achieve this is simply identifying where the higher time frame is going and simply getting in sync with the lower time frame. That's all that I am teaching in this channel. Once you know is high probability in the higher time frame to reach a target, just refine your entry in the lower time frame to get in. The other key to always know if you are right is simply waiting for a confirmation of your expected direction using the lower time frames when price hit a higher time frame level. And the final tip is to wait for high probability scenarios, avoiding conflicting environments, meaning consolidations, contractions, or unclear direction in the higher time frame. Trading the obvious moves is a way to achieve consistency over time. Okay, now let's apply this to the charts to know where price is going intraday. Just for the morning session from 7 a.m. to 11 a.m., we are going to be using the 1 hour time frame and 15 minutes time frame. We will be getting in sync in the 5 minutes or lower time frames. We are going to be using recent price action from the week 4 of October 1st. You start with 1 hour chart. You just mark the last dealing range and notice if it's bearish or bullish. The Rook Algo does this for you, but you can do it with a naked chart if you want to. One key element is to notice when this dealing range was formed, and does it look like we're in an expansion? Or, if it looks like we are consolidating or contracting, if that the case that dealing range is not to be trusted because price is just creating liquidity. To then take both side and then move. So we noticed that this last week that was the case, price is just moving inside previous dealing range contracting, creates a new dealing range and take both sides, but it continued to leave previous week liquidity intact. The algo have a filter to show me only the buy signals in this case, not interesting in shorts until the higher time frame shows me that is clearly bearish. So we drop to the 15 minutes now. Notice that we are using those orange levels are the 1 hour dealing range, so we know we are in a discount. The 15 minutes shows a bearish dealing range. This is clearly a range created only to make buy-side liquidity while it reached to the higher time frame key level lower, so we know this drop is likely to be reversed. Next step is waiting for a clear move higher with displacement notice that price is close to the orange line lower quadrant, that is the algorithmic deep discount of the 1 hour dealing range, is our key level. Why? Because it already reached an order block in 15 minutes, but it doesn't show displacement. It has to show displacement with imbalances or acceleration to confirm in that we are going long. Notice this looks like a fair value gap, but it is not confirmed yet, so we just wait. Moving forward, we see it gets completely close, that's not a good sign. Now we hit our key level, waiting for displacement. Trading involves a lot of waiting here. We can move forward, but in the real market, we need to wait. Okay, now we got it. This looks like a real displacement notice. The size of the candle should leave a fair value gap open because it reacts at a key level. We can drop to 5 minutes to search for an entry. The Rook Algo is already in the move. We see the algo is in an impulse, so we can place an entry around the upper portion or around the 50% of the expansion leg. Why? Because we are in an impulse on the higher time frame 15 minutes, so price should respect the upper portion of the last range in order to continue higher. Notice this wick taps into a fair value gap and previous dealing range and go higher, so this point should be respected. This is a possible entry following the impulse around the last wick that should not be broken. And we are in perfect fill. We hit an important level. This week open. Let's see, we are retracing now, waiting to see if we can get a better entry. Look, the algo give us another buy, nice entry, so we can take that. I am not placing my stop loss in the low because it's missing the displacement higher. It can sweep the low. Exactly like that. So we get displacement and finally move to target. So going back into the 1 hour time frame, we see price reaches previous week buy-side liquidity and hit those equals highs. Notice it don't close higher, so we are back in the range. It could potentially reach lower now. Notice 1 hour is retracing now and is below this week open again. We are going to analyze the rest of the days faster because the process is the same, and I don't want to make the video too long. In 15 minutes, we notice price is in a dealing range lower, and we already hit deep discount in 1 hour. We are inside the same dealing range of 1 hour as I told you, so is likely to consolidate or go short today because we are still bullish in the higher time frame, so we just wait to see if there is anything clear. Remember the third rule, wait for clear higher time frame direction. 5 minutes give a clear sell here, 2 consecutive dealing ranges lower, and it was respecting the lower portion. But we let them pass because our higher time frame is bullish. Until we break previous day low with a body. Just like that. It reaches previous week sell side after taking buy side. Interesting. It quickly returned to the dealing range in orange. If we were to continue lower, it should respect this lower portion. 1 hour is now bearish, as you can see in the Rook Algo. Where did price came from? A discount order blow below. So is likely to go higher again. We got smooth equal highs. The last dealing range equilibrium of 1H is the key level now. We are near the New York kill zone for Thursday. Let's see what happens. Keep in mind that 1 hour is bearish, while we are below the equilibrium. "15 minutes is bullish expanding in blue. I am marking the last range. Dropping to 5 minutes we see is consolidating around the lower quadrant of the 1 hour dealing range. So you see, the higher time frame is not in sync with the lower time frames. We wait. Notice the reaction of this level. Displacement lower as expected because it touches the higher time frame. You see how you can predict the moves focusing on the 1 hour key levels. Now we will like to see if this 15 minutes range can make some move higher. Switching for a moment the algo to bearish to see if there are some premium quality entries. Notice we are trying to leave the lower portion of the 1 hour dealing range but is finding support. Stop here, not very clean price action. Now, this looks like a real displacement. It should respect this last dealing range lower portion in order to trend lower. If not, we could get back into the same 1 hour dealing range, probably reversing. So we got displacement back into a range that was ready to trend lower. Let's see 1 hour. Interesting? This looks like the famous turtle soup entry. Notice all 1 hour is bearish, but this could be a potential reversion. If it fails to break lower, we wait for a confirmation. Price should trade with a body above the 1 hour equilibrium to consider longs. We are now in the afternoon session. I will move forward to the next day. In 15 minutes, we notice a new dealing range with a bullish potential. Body breaking above the expected level, 1 hour is now expanding higher, clearly bullish. The Rook Algo was already in. You see how powerful this is? Now we just need to get in sync in the lower time frames. There is a free version available of the Rook Algo. See the description of this video to get it. Soon, I will be releasing the Pro version. If we are right, price should respect this 1 hour order block in green. Now, dropping into the 15 meters, we see the blue dealing range upper portion was respected clearly bullish. Now, we will look for an entry in the 5-minute time frame. Notice the last 5-minute dealing range, the upper portion is being respected and we are clearly trending higher. Waiting for the New York kill zone to take a trade. Okay, price retrace into a discount. We could enter in this zone, but prefer to see the displacement higher, not liking the possibility of cleaning the close equal lows. Price displace and break above the current range, so now it should respect the upper portion. We can enter in this order block of 5 minutes to clean the smooth highs in the 1 hour. Price take the trade and we move faster to this week open and ultimately our target. So hope you like this backtesting now. Should be clear how to use the Rook Algo using a higher time frame reference. In the last portion of this video, I will show you the statistics of the Rook in 1 hour. Let me close all of this. Here you got it. It can be set up to achieve better results and adjusted to your style of trading. The importance is you see the real statistics, a steady mountain going higher over time, and around 123 trades. Profit factor is 2.3, meaning it makes in average 2 times the money is loss. 46% profitable is pretty good. Over here I got some additional statistics. We can see the consecutive take profits and consecutive stop losses it made. I'm not hiding anything. This off course can be decreased using additional filters to avoid larger consolidations. The ARR is a measure that I take to see the accumulative risk-reward, assuming that every loss is always the same amount by adjusting the contracts, or lots something it can't be simulated here because is always the same contract size. But in simple words, the higher this number the better, for the strategy means it can make more money. Okay, now I'm going to show every detail of the strategy. Going to move back in time so you can see it performs as we want to. We can add this option entry details to see the risk-reward of each trade. Notice it has a number indicating the consecutive wins or losses. Look, this nice trade 3 to 1 here. Remember? This is the 1 hour time frame. We can use the lower time frames to take advantage of this kind of moves. Here we are seeing only buys. Because the Nasdaq is in a clear bullish trend, it has the possibility to configure all this setting, types of take profits and types of stop loss, minimum desired risk reward, standard deviations or time filter, among others. Notice how easy the performance can be optimized based of your personal preferences. Take profits have all these options: the normal touch of the target, or close only the trade when price close about the target, or wait for a retracement or a reversal, means we are closing the trade only when price reverses. After hitting our target is a riskier approach, but some people want to ride all the expansion move. Notice here, price maintained the trade even after hitting target the blue line, but it moves the stop loss to break even the green line. Exit in profit when it detects a reversal. We can change the target to 4.5 times the current range size. Notice the profit factor increases to 3.3, but it also increases the consecutives, stop losses. This losers can also be break even. You know that if it maintain a steady horizontal line over time. If you are interested, I am going to add the Rook Algo to a free Telegram group for a limited time to test the markets live. See the description of this video to join. Now to end this, let me show what happens if you use only sells in a bullish trend. Not very good results. This Rook Algo is a trend follower. It will not work if you put it counter trend or in a big consolidation. We can add both shorts and longs, but the results are not as good over time. Okay, this is the end of this video. Hope you find this video insightful. Don't forget to subscribe and hit the like button. Leave a comment below telling what do you think about this video. Really appreciate the feedback. See you in the next video. Good luck and good trading.